Good afternoon, everyone. You're all very welcome to the first Thursday Open for 2023. Obviously, very, very happy New Year to everyone. For those of you who are watching along here this afternoon for today's open call. So I suppose first couple of days back this week, we've had a lot of volatility up and down. We've had a lot of back and forth in the indices. We've had a lot of back and forth in across a lot of these markets with some particularly decent moves this morning in yen, dollar yen more specifically. So I suppose yesterday, this week, obviously busy week, getting back out of the winter doldrums into more normalized, or what we would expect to be more normalized trading volume, broadly speaking. Of course, we did have some bank holidays on Monday. We did obviously have the FOMC minutes last night, which did give us some volatility into last night's obviously session close today. Not really that much in terms of economic data. The jobless claims has come in pretty much on par. Goods and services trade balance has come in obviously better than expected. Deficit is obviously much better than expected. In fact, a 13 billion differential in terms of that. And of course, the ADP employment data today has, of course, come out a fair bit higher than expected as well, which is obviously a positive thing. So obviously tomorrow, we have quite a lot of data tomorrow. We've NFP, we've harmonized consumer prices in Europe, we've retail sales in Europe tomorrow morning, which obviously Neil and the lads will be covering through tomorrow morning. Tomorrow afternoon, we do, of course, have, as I said, first non-farm payroll of the year. And obviously looking at in terms of the overall consensus for the December payrolls, because as we know, it's the month beforehand. So tomorrow, the participation rate is expected to be at 62%, which is marginally above it. The non-farm payroll tomorrow is 200,000, which is actually 63,000 less than what would have been the December for November figure. And of course, we're looking to see, does that unemployment rate tick up? So for those of you who would have been reading the minutes last night in terms of what was said, obviously middle October in December, one of the big takeaways is that the Fed is expecting the unemployment rate obviously to tick higher, and of course that is obviously leading into that recessionary indicator or recessionary mandate that a lot of central bankers are now starting to look at into 2023 and beyond. Tomorrow, of course, we do have Canadian unemployment data with ISM. So we're going to have probably the busiest day of the week potentially could come tomorrow, as we do have European data in the morning. We have a raft of data in the US and Canada tomorrow afternoon as well, with obviously some speakers. So Fed Lane and Cook, ECB Lane, should I say, and Fed Cook also speaking tomorrow as well. So it's going to be a busy end to the week. Obviously, the first week, it's very, very hard to know. Sometimes we talked about it earlier in the week that the initial buying in the funds in the UK was witnessed, obviously, the early parts of this week. A lot of the US indices, though, has been fairly conducive to consolidations. We had that deeper consolidation through December, that kind of into Christmas Day rally. Markets not really doing a whole pile. However, this week, the European indices are leading it in terms of volatility. So it'll be interesting to see, obviously, tomorrow, NFP markets trying to remain fairly stable into NFP. Will there be any sort of significant reaction? And of course, 1:30 tomorrow will be the key data for that. So as we look at the price action, first week of the year, indices as we see it is very, very conducive to consolidations, and you only have to look at the S&P from even the 19th of December to the 5th of January, up and down in a consolidation range. It's really lacking much of a direction. We talked about it there into Christmas. You would need to see 3,900 being broken to alleviate sort of some upside strength. And same again on the downside, look at that kind of 37.75, 37.80 level. So it's been pretty much for the last 2.5 weeks or so, indices in kind of a 100, or the S&P should I say, in 120, 130 point range. NASDAQ quite similar in the sense as well. The NASDAQ has been fairly conducive off of these November lows here down around 10,700, 10,800. We've seen a lot of consolidation over the last few weeks, and you only have to look at the price action. Fairly boring, fairly back and forth, fairly range driven, and you can see that as well fairly clearly on the Dow Jones as well. So obviously today's point of view is to see, is there Thursday, traditionally speaking, has been worked a treat through 2022 in terms of the volatility, in terms of the busyness. We're looking to see, can we start to see some sort of breaks of the slumber, the consolidations, the ranges for the last week, or even more, even heavily the last couple of weeks, because even here as well on the Dow Jones, fairly conducive consolidation in ranges. 33,400 is holding as short-term highs, 32,600, 500 is holding as a bottom. So you have a 900-point range, which is approximately speaking about 3% range for the last 3 weeks or so. Again, the expectation was that once the Fed meeting was done and the ECB and the BOE was done around about the 16th, 17th of December, that was really it. 13th, 14th of December, that was really it, really until the mid of the year. And of course, tomorrow we're hoping to see a little bit of a reaction from the NFP. So I suppose from a broader perspective, that's kind of where we are in the US. Gold has been quite a big mover over the last few days. If you've been watching the gold, if you've been watching the FTSE, there's been fairly significant moves over the last number of days or so. Gold has just continued to elevate itself through that kind of 1800, 1810 level we talked about before Christmas. It did get to as high as yesterday, approximately speaking around 1860, before it has come back lower tomorrow, or ahead of tomorrow's, as I said, NFP figure. So we're really kind of gauging that tomorrow's sentiment to see how does the markets react. If you look at the broader perspective, you can see here there's a lot of price action. There's a lot of liquidity up here around 1870, 1875. That is definitely going to be a level to watch tomorrow, because of course, if that NFP figure continues to churn out, if we get that continued consolidation in the DXY, albeit there's been a little bit of a buying bias today, that'll obviously be a mover for gold as well. But I suppose gold, FX pairs has been quite an inducive move today. We talked about dollar yen. We only have to look at some of the FX pairs if we bring across some of the charts very, very quickly. Let me just open up my Euro USD. Euro USD. You can kind of see it here as well. Some decent moves this morning. Very clearly selling coming through from that kind of 106.20, 106.30 level. We're a modest 800 points down from where we were at around 7, 8, 9 o'clock this morning, which is obviously quite interesting. If we look at dollar yen, the other compatriot, decent moves in dollar yen today as well. There's been a fairly decent upswing in price action after those lows from Monday as well. 129.50, 130 held as the bottom. We're now trading around about 300 points higher from where we were at the beginning of the week. Of course, that's conducive to, again, that massive volatility that we saw through December into year end in the yen pairs. We're obviously going to be continuing to look at that, because that's going to be a big play, because of course, as we talked about, this is where the yen was all through the early parts of 2021, way down here at 105, 110. And then we had that massive elevated run up to 150. So the markets are finding the normalcy that we kind of look for in terms of getting back that volatility. If we look at the European pairs today, or the European indices, should I say, firstly, DAX has been fairly conducive, way up here at this kind of 14,400, 14,500. But more specifically, since the beginning of the year, there's been a very nice buying bias in the European indices. DAX is up a modest 500 points. The FTSE has also joined that and pushing higher as well. You can even see it there from where we ended the year, where we began the year. 2022 and obviously beginning of 2023, the Euro Stoxx is up a modest 150 points, which is a fairly significant move for a rather heavily volumized asset class in the Euro Stoxx as well. And you only have to look at the FTSE, which of course into year end had taken a little bit of a dip back to the 7,300, 7,320s, is now trading all the way back up at the November highs, that month end of November high, way up here at just underneath 76.50. So markets, broadly speaking, very, very nicely poised for the day. As we look at the indices, we have seen some selling coming through in the last couple of hours or so. Again, that's brought about by that slightly stronger dollar. We've gone back from that kind of 104.20, 104.30 level on the DXY, all the way back into this local high here from 105. And that's going to be the fulcrum here today to see, does that dollar strength continue to pick up? Does that elevation in risk orientation out of risk assets into safety play out? Because of course, if that narrative continues to play out through the course of the day, we should be looking to see, can the S&Ps start moving lower? Can the NASDAQ, can the Dow Jones move moderately lower? Now, of course, we are sitting again from where we were earlier. We're sitting around about 200, 250 points down. Dow Jones has been fairly conducive to ranges. You only have to look at yesterday's or the weekly lows here for the beginning of the year. 32,800, 32,900. We're seeing fairly significant buying off of this short-term buying off of this zone over here. If you look at the ladders, you'll see it play out there as well. And way up here, as I said, around 33,400 to 450,500, you're seeing a lot of profit taken and price actions reverting back into the range. So that's really kind of where we are for today. Folks, just going to kind of watch the price action for the first minute or so in the open. Dow Jones is moderately bearish still on the open. After that kind of wick, S&P's coming in here around that 38.25, 38.30 level. And of course, NASDAQ is very much tilted to the downside as well, particularly in the short term. So we had that run up today. Very, very nice rejection up around 39.50. We're now sitting a modest 130 points lower into the US trading session. So US assets broadly weaker or are poised to be weaker into the open today. They have moved lower. We're seeing that pickup in dollar strength. But of course, we're waiting to see, does that maintain diligence? Does that maintain through the course of the session? Because of course, we've often seen it, particularly this week, session highs, bit of profit taken, reverts back down into the range. So we need to see kind of that momentum really have a follow through 3 o'clock, through 4 o'clock, really to see if it's going to be sustained or not, because otherwise it's just going to fade out and we're going to return back into those ranges that we've kind of seen all week. So worth playing an eye on that. We're keeping an eye on that. Of course, tomorrow, NFP, as we said, European harmonized consumer prices at 10 a.m., retail sales at 10 a.m. So that's going to be interesting. And then, of course, as we said, we've got Canadian data, we've ISMs, and of course, we've NFP tomorrow as well. So really kind of looking for this week to kind of start the ball rolling, get back to normancy, and then ready to go again next week as we have the first full proper trading week of the year, no bank holidays, straight into it on Monday as well. All right, have a great